Good morning, ladies and gentlemen, afternoon or evening. This is going to be your daily cryptocurrency market update with ALLIN Crypto, and we're going to be diving straight into it. I'm going to be telling you in this video why I believe that the next leg lower for the cryptocurrency market has indeed started. How we're going to be doing this is we're going to be doing some TA, not necessarily on Bitcoin, although we will look at Bitcoin, but on the cryptocurrency market as a whole. So on the market cap of the cryptocurrency industry, which we know sits at just under $1 trillion. So $921 billion is in the, that's the volume of money in the cryptocurrency space. And we are going to be looking at the total 2 and the total 3. So this is the total money within the cryptocurrency market. This is the total money within the cryptocurrency market, excluding Bitcoin. And this is the total money within the cryptocurrency market, excluding Bitcoin and Ether. And I have to say that when the chart gets weaker when you remove Bitcoin, and then it gets even weaker when you remove Bitcoin and Ethereum. And I believe that essentially we've been respecting, the market has been consolidating for around about 120 days now. Just over 120 days. And we've actually been respecting a grind line, a trend line, that is actually pretty horizontal. And as a market technician, you will know that the more horizontal the trend line, typically the more severe the break will be and the more sort of potency there is with a break. The more vertical, often the less sort of momentum will follow it and severe, although it doesn't have to always be the case. But when you get it's kind of like a line that you're grinding along, and it's of more of a vertical nature, which I'll show you. When that breaks, it really shows that, you know, that is no longer being respected and that the direction's kind of being chosen. And that's what we're going to show you in this video by looking at the total money within the crypto space. We'll give you a bit of an overview on what we think happens today. I've had lots of requests for daily specific Bitcoin updates. Guys, let me know in the comments if you guys would like me to cover specific coins as far as TA goes. On a daily basis. It could be whatever coin you want. If I get enough support and requests to do so, then I'll definitely spend my time. Maybe we'll add a daily video in where we look at a specific coin and do TA on it daily, if you guys are trading it or for whatever purposes. We're also going to be looking at the fact that you have Elon Musk talking about earnings and talking about a recession that we are now in, and we have been in, whether they want to change the name of it or not. And the fact that he says, look, you know, you've got to expect there to be some sort of a drawdown on Tesla's earnings based on the fact that we're in a recession. We also now have, really for the first time, Jeff Bezos coming out and saying the same thing. This says Jeff Bezos is the latest to warn on the economy, saying it's time to batten down the hatchets. So this is typically your chosen, careful what I say here, your kind of billionaire class or public figure billionaire class. They won't come out and alert people when they should. Typically what they'll do is wait until they are willing to accept it, wait until, you know, there's going to be a media shift and a kind of sentiment shift. And that's what I feel like we're now moving into. We're moving into that reality that, look, guys, we are in a recession and things are going to continue to get worse, and there is going to be further wealth destruction on top of what we've already seen, which has, we've never actually, this year, I think we've seen the most wealth destruction ever in terms of dollar value. Now, of course, we live in an inflated world from years and years ago, so it's kind of an unfair metric to say, well, you know, £1,000 back in 1950 was worth a hell of a lot more than it is today. But in terms of actual dollar value, and the number of dollars, we've never seen such wealth destruction. There's also a number of interesting things going on in the yield market, the bond market with the yields, and we're actually at 2008 for the 10-year government bond, US government bond. We're at 2008 levels, and we can actually overlay maybe the S&P and see what the S&P was doing last time. Yields were at this sort of a high. In my opinion, guys, that we are now starting to enter the failing of the debt system. And this is, since this 40-year bear market for yields and obviously a bull market for bonds, there's been continuous and almost promoted issuance of debt to a level that is never ever going to have been viable to pay back. And the problem with that is that's great when interest rates are at 0 or negative, but when you have a higher burden on that debt, you start to get defaults, and this is what I think the yield curve essentially is predicting, that we're going to have an onslaught of defaults. This is and it's not me that actually pointed this out. I wasn't really familiar with the bond market, and you should always give credit where it's due. It was actually the crypto sniper or the market sniper, Francis Hunt, that really switched me onto the bond market and really highlighted the fact that, look, this is a trend ending event that we had in March 2020, and we've seen the price action show that. And could this be the start of a failing debt system, i.e. currency system? So we've got quite a lot to get through. Let's just take a look at things. The market's flat today. I can't decide whether on a day trading perspective to go long or short here. We've been accurate in terms of direction pretty much every day this week. Poor on execution in terms of my trades. If you want to find out about my trades, you can do by joining my Patreon. It's just a small component, the day trading side of things and the sort of swing trading side of things, in regards to a larger package that you get as being a top tier Patreon member. You know, we are very investment focused, and we understand that now is not the time to be investing. We've been largely in stable coins, dollar stable coins, I might add, for a considerable period of time, and we're still very much within that stance. But we have altcoins that we're looking to accumulate and everything. Check it out. Might not be for you. If it's not, that's absolutely fine. We want people that want to be there. But you know, let's get straight into really what the main point of this video is going to be, and we can do a little bit of daily TA where we can look at the dollar. We've said yesterday the dollar is the most important chart. Watch the dollar. You can long or short off what the dollar's doing. Today we've seen gold have a little bit of a spike. FTSE is down, and the futures market is somewhat down. I can still maybe see the scope for upside. It's hard because I'm trying to position for some big shorts. And when I say big, I mean large amounts of money. Probably, you know, the amount of money just on single trades that people are looking to invest, and that have to invest. So it's kind of hard for me to figure out exactly where to position. But, you know, anyway, we're rambling on. Let's talk about what the main purpose of this video was, and that is that I believe that the cryptocurrency market's next leg lower has begun. And I want to talk about this range that we've been in for the past 120 days and how we have formed, depending on how you want to draw it, very much, and I'll show you what I mean by the fact that when you go and you take Bitcoin and Ethereum out, the chart gets weaker, because if you take Bitcoin and Ethereum out of the totals, you've actually already broken this trend line, and not just put a wick below it. Very common. Markets are very over exaggerative. It's very common that you will wick below something, but when you look at the market cap and you take Bitcoin and Ethereum out, you've not just wicked below it, you're now below it and holding below it. So this is what I'm essentially looking at as a grind line, and you've been respecting this. One reason this rally was so harsh was because no one was expecting it. And this is what you've got to think as well as a trader right now, is everybody's bearish. This is going to, in my opinion, at some point, doesn't have to be now, cause a face-ripping rally, just like we had back in June, which gets everyone to flip narrative only to pull the rug from underneath them. Remember, we stayed out in June when you had every YouTuber, every Twitter, spokesperson coming out and saying it's time to buy, the bottom is in, with just a hope and a prayer, basically no TA or sort of economic pretext to back any of that up. But this grind line, you've essentially been respecting for a long time now, and you're right on. You're looking for the door that's going to take you to that next leg lower, in my opinion. You are grinding along this, and you're actually losing momentum. We had called for maybe a head and shoulders on Bitcoin, and this would be your weak right shoulder. Potentially still is the case. And on Bitcoin, I think that will give you a target around about 13,800. But this is bad structure. And if we take Bitcoin out, you can see how it's even weaker. And actually, you could very, very, very much argue, depending on how you want to draw it, that you've broken it. So you're actually putting a toe below it. And you've seen a liquidity test, which is what I think this was. Notice you don't have that with or you haven't actually invalidated this structure with Bitcoin in the total market cap. Let's get rid of these. So notice how you actually haven't invalidated this yet. Depending on how you want to draw it, but if you're using the wicks, if you're just using the candle bodies, you know, you would still argue that you haven't actually taken it out. But this is total, and you can see it gets weaker when you take Bitcoin out. And it actually, and this is, there's no strength here at all. This is of serious concern. Anybody that's calling a bottom here, this is consolidation and sort of restrictive price action that is kind of like a build-up of pressure that, in my opinion, is primed for downside. And you can see what I mean. When we take Bitcoin out of the chart, it gets weaker. And then when we take Ethereum and Bitcoin out of the chart, it gets considerably weaker and has actually started its leg lower. And you can see you've almost had, you know, you depending on how you want to draw this, some people don't like using the wicks. Some people, or the shadow, sorry, some people do. But you can see if we take Bitcoin and Ethereum out, and you can see this is excluding Bitcoin and Ethereum, this is even weaker. And you've not only is this weaker, it's absolutely textbooks when you break a neckline, trend line, whatever it is, that you get a retest of that and a kind of confirmation. And you can see the big wicks that you had, the big shadows that you had here, showing you that people were happy to sell here as viewing this as a retest. So you can almost compare these and go, okay, well, with Bitcoin involved in the total market cap, it's not as weak, but looks like it's going to spill. Take Bitcoin out, it's already starting to spill. You take Bitcoin and Ethereum out, the two largest players, not only is it already spilled, and by spill I don't mean it's had that capitulation that I think is going to follow. I think what I'm trying to show here is I think that ball has been set in motion. I think what you're now seeing, this is the precursor for that downside, in my opinion. And you're seeing that with this. You know, this has started, in my opinion, that next leg lower. And this is something that you have to respect. And you almost had a sort of bigger scale here. So you're, in my opinion, what I'm trying to show people is that you are here. You're basically repeating these structures, you know. And just as this is, we want to get a lot of stuff on in regards to trading and really start to educate people. You know, when you have trend lines, for me, I take a trend line that's more vertical, so something like this. And then you break. I take that trend line a lot more serious and put a lot more potency on it than a trend line that's like this. And then you break. The more vertical, typically the more potency is behind it. And I'm telling you that I think the next leg is coming lower. Forget these people that are discrediting the next leg lower based on the fact that everybody is calling for that price action. The thing there is it becomes self-fulfilling prophecy, because you won't get people bidding this up. I am kind of at this point, certainly if we're looking at Bitcoin specifically, looking for relief, right? But I just don't know where it comes from. And I think that the stock market needs to support that. Who's going to be buying the stock market going into absolutely brutal earnings, potentially, which is going to lower the stock price, going into a dollar that just seems to be persistently. Remember yesterday, guys, and we gave you this. We gave you whether to long or short yesterday, and you would have made money based on looking at the dollar, not even looking at a crypto chart. We said, you find yourselves and hold above this area of interest for us, and you go long. Remember, we hadn't put in this price action when we made the video. Then that is going to be detrimental for crypto if the dollar goes higher. Whereas if it comes off, you may see crypto get a bit of a rally in the stock market and the risk on asset class. The dollar is being persistently strong here. Persistently strong. And if it continues to push, well, that's going to mean further downside. And people are trying to catch a break with the dollar, which it will have, I think, eventually. But the real question is, does it run its course first? you will have a more of a prolonged rest period for the dollar, but this is just strength, 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 in my opinion. You're squeezing here, guys, and you're likely to break from the to the upside. You're coming into a point of restricted price action. You're coiling up. Boom. Then maybe you get that 120 price action that everybody's calling for. I absolutely agree that you shouldn't follow the masses. But the thing is with the masses is they are only over the past couple of months realizing that this is the gravity of the situation. Whereas we, and we are still part of the masses, have been majority US dollar stable coins now for over 6-7 months. We weren't the first out by any means, but we don't need to be. We've already done exceptionally well, even if this was the bottom, which, you know, there's still the possibility that it may be. I just don't think it's very probable. And I think people that are calling for that are really just hoping that is the case because they've bought. You can, on Twitter, it's so obvious who's got what positions on based on what they're tweeting. And I'm guilty of that myself. This is from Alicio. Europe's misery index, unemployment rate plus inflation rate, is, you know, higher than the Euro crisis of 2011 and 2012. All of these metrics and all of this, you know, the yield curve back at 2008's levels, it's telling you something. It's telling you what the environment that we're in is. And it's going to get worse, in my opinion, unless there's a serious pivot. But even if there's a pivot, we still have inflation, which is, you know, extremely detrimental. So unless maybe the war in Russia ends or something like that, what's the catalyst for upside? And who's going to be bidding this market up? I think one reason it hasn't completely free-falled is because you still have pensions and stuff that are buying and mandated to buy. Just basic funds like the indexes like the S&P or the NASDAQ. And in my opinion, we've said this time and time again, you're going into that 2008 or 2000 continuation steep downtrend that is going to scold most people because they've never had to deal with it as markets have only gone up since 2008. And what was Bitcoin was born in 2008 has never had to see this kind of an environment, which is why we have the pretext that if other markets are going to go low and liquidity is going to continue to get drained out, given that it's moved just like other markets, the risk on asset class, Bitcoin and crypto is going to do the same thing. And we think given the structure that we're seeing on the total 2 and total 3, you're there now, guys. This was from Elon Musk addressed Twitter takeover, possible recession on Tesla earnings. Tesla reported a 1.05 in adjustment EPS, ahead of expected of 99 cents. On revenue, lighter than expected. So he's basically saying, look, this is as a result of a recession. You also have Jeff Bezos coming out and essentially warning about the state of the economy and cautioning that rougher times are likely ahead. So this is where we see the shift to, okay, guys, we're now in a serious recession. You know, it's time to get cash and you know, be safe and be sort of prudent with your spending and this and that and the other. And then it becomes a kind of continuation thing of an already continuing downtrend that leads to more, you know, tightening of the economy. And until we see a pivot, until I personally see a pivot, it's not a market that I want to be investing on. And me and my team are, you know, prepared for this. We have been for a while. And like I say, if we're wrong, we're wrong. We still have a little bit of crypto exposure, but we have plenty of time to get back in, you know, double, tripling, quadrupling, 10x in our crypto holdings. That's all I've got for you in this video, guys. Real content, not like the majority of what you get out here. You know, it's a fake world that we live in, guys. And that's all I've got to say. If you've enjoyed the content, a like is always appreciated. Turns a comment, and I look forward to seeing each and every one of you in the next YouTube video. Have a wonderful Thursday, guys. I'll see you in the next one.